Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 15th of July 2023 and we're publishing our gold and silver weekly update for the week ending the 14th of July. As we predicted last week, we said Wednesday could be a game changer, and it certainly was. So let's take a look. Now first, just a quick reminder that we've set up a second channel entitled Finances Do Matter. With over 120 videos, I'm producing around 5 a week, covering a whole array of financial topics. We've placed the link to this channel in both the description box and comment section below for those who've not yet joined. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold rose $30. Rising from $1,926 to $1,956, having hit a high of 1963 and a low of 1913, a rise of 1.6%. Frankly, in view of the weakness of the dollar, a disappointing rise in my view. In sterling terms, gold finished the week at £1,494, that's down £7, and in euros it closed at €1,744, that's down €13, and just goes to show how weak the dollar has been compared with both these currencies. Silver, however, rose $1.87, rising from $23.09 to $24.96, having hit a high of $25.05 and a low of $22.77, a considerable rise of 8%. In sterling terms, it closed at £19.09, that's up £1 and 5 pence, and in euros it closed at 22.26 euros, that's up 1.17 euros. The gold to silver ratio fell significantly, in fact by 5 points, from 83.4 to 1 to 78.4 to 1. Now the difference between gold's high and low was $50, and the difference between silver's high and low was $2.38. The largest difference seen for some considerable time. This is what we said last week concerning our forecast. We expect gold to trade between 1875 and 1975, which it did comfortably, but silver did trade after Wednesday's CPI report above our outlier range, which was at the top end $24.50, and it did in fact close above that range. It's quite ironic because as we were preparing the report last week, we were going to put $25 as the upper range and decided against it last minute. That'll teach us for not going with our original forecasts and plans. Anyway, before we discuss what happened, and especially on Wednesday, let's look at other financials. Bitcoin stands at $30,345, that's up $124. The Dow Jones is also up at 34,509, that's up 775 points. The S&P is up 107 at 4,505, and the Nasdaq is up 453 at 14,113. The FTSE 100 index closed at 7,434, that's up 178 points on the week. Interestingly, all those exchanges gained more than they lost the previous week, except for the UK FTSE. Oils were also higher, with Brent crude up $1.40 at $79.87, nearly touching that $80 again, and WTI crude closed at $75.42, that's up $1.56. The big news was the significant fall of the dollar index, and that currently stands at 99.91, that's down a considerable 2.36 points on the week. Now, in terms of economic data last week, the consumer credit figures for May fell considerably. In fact, expectations stood at $21.5 billion and the reality was $7.2 billion. Initial jobless claims were lower by some 13,000 against expectations, and both the producer price index and import price index were also lower than anticipated. The big change effect, though, were the CPI figures, which were considerably lower than the market expected and lower than we anticipated too. CPI for June came in at 0.2% compared with expectations of 0.3%, and the same applied to core CPI, which is what the government and central banks tend to focus on. They came in at 0.2 compared with 0.3 expectations. What's interesting is that the CPI figures in May were 0.4, so this 0.2% is half of what it was the month before. Now, although there was still a rise, the rate of growth of inflation is the lowest since 2021, and the yearly rate has therefore decelerated overall to 3%, though the core CPI still stands at 4.8, and it's this figure that we are focusing on. So before we look more deeply into gold and silver, what have we got on the agenda next week which could influence prices? Well, on Monday we have the Empire State Manufacturing Survey for July. Tuesday, the very important retail sales figures for June, which are expected to be higher than they were for May. And we also have the industrial production figures for June. On Wednesday, housing starts. And on Thursday, of course, the normal initial jobless claims. And on Friday, there is nothing scheduled. So the only day of great importance are the retail sales on Tuesday. Now, the following week, of course, on the 26th of July, we have the FOMC's decision on interest rates. Let's now look a little more closely at gold and silver. Although gold prices rose last week, they only rose marginally higher than the gains received as a result of dollar weakness. Technos call it fractional gains. Gold is currently following the dollar, and there's little to suggest this will change much throughout the summer. There's still the possibility that gold will reach all-time highs later this year, and this is what we predicted in our 2023 forecast published in January. Meanwhile, we see gold well supported at or around the 1897 level and meeting short-term resistance at 1971 and then $2,000 above that. We should, however, not forget and therefore pay attention to the BRICS plans for a gold-backed currency. And we'll cover this in a separate video. Silver was a different kettle of fish, and we saw quite a takeoff, smashing through the traditional $24.50 resistance level. Like gold though, silver took advantage of dollar weakness, but also traders took the view that if inflation does not need now to be so aggressively dealt with by even higher rates, then the US could avoid a recession, and the industrial demand for silver will begin to rise at best, or not fall at worst. That said, silver did seem to run out of steam a little on Friday, and the question is, will it move positively into next week, or will we see a pairing of the gains already made? Some analysts are predicting a rise up to $26.50, and others a fall back to $24. So where do we see gold and silver moving next week? Well, the question on everyone's lips now is, will the Fed raise rates on the 26th of July? And perhaps in view of the favourable CPI figures, they may leave them alone. Now, this won't be popular for our US members, but our view is that they should go up another 25 basis points. Yes, it will cause pain, but we need to ensure the gains already made against inflation are not sabotaged. It will only take, for example, approximately a $5 increase in the price of a barrel of oil to see the inflation slide halt. Increases in wages too will also have an impact. Now, retail sales figures, if strong, may push the Fed to risk another rise. If they're weak, though, they may defer and wait. Either way, it is, for the moment, generally accepted, as far as the US is concerned, that there is only likely now to be another 25 basis point rise at most before we begin to see rate reductions. We would not be so sure, though, in view of other countries around the world failing to reduce their inflation to the same extent. Let's remember, global economies are interconnected. So, we expect to see gold trade somewhere between $1,900 and $2,000, with 1875 and 2025 as outliers, though we generally will expect gold to trade within that 19 to 2,000. Silver may resume its upward trend Monday and Tuesday, and then could fall back again. And so we forecast silver to trade somewhere between 24 and 25.50, with 23.50 and 26 as outliers. If it does follow through on Monday, Tuesday, and there's a bit of a spurt, it could touch 26.25, but we certainly don't see it going beyond that. What do you think? Do share your thoughts. Meanwhile, please give this video a thumbs up, subscribe, press the bell sign, and we'll see you soon. But as always, have a safe, enjoyable weekend. and let's look forward to a prosperous week ahead.